Right, so welcome back to the podcast, everyone. Today's guest is Ify. Ify, would you like to, quickly introduce yourself to the audience?
Of course. Thank you, Hugo. My name is Ify Asoh. I'm a resident of Massachusetts. I'm an ICU pharmacist or a critical care pharmacist, and I also own a private equity firm. We hold property in DFW as well as Pennsylvania, so
Mhm.
apartment complexes
Okay,
specifically.
great, great, great.
Uh,
Well, we'll get into some of those details pretty soon, I'm sure. All right,
Of
so
course.
I think one of the questions that I always like to lead with is simply, how did you first get into real estate? Because coming from like a pharmaceutical background, something like that, there's no connection to real estate, right? So
No.
how did you first get into real estate? What inspired you? And like what was the aha moment that kind of made you maybe focus mostly on multifamily specifically?
Right. I wish I could tell you that, oh, I read Rich Dad, Poor Dad. I mean, I think I read a few pages
Hmm.
early on in Nigeria, but I wish I could tell you I read Rich Dad, Poor Dad and I got inspired and, I bought a duplex and then here I am, bam. No, that wasn't my story.
Uh-huh.
Life flung me here. Unfortunate life circumstances flung me to a point where I realized that. Yes, I had a job that could put food on the table, but no, I wasn't as financially secure as I would have liked to be.
Hmm.
Uh, no, I didn't want to have to pay student loans for my children.
Yep.
I could see that in the horizon. So that's part of what unlocked the fact that I was clearly trading all my time for money.
Yep.
And it wasn't the smart way of doing things. And so one thing led to the other. I live in a place that isn't quite known for a ton of, real estate meetups. So it's not that there was this, huge gathering in Massachusetts. So I started looking into investing in the stock market. And then learning how to buy a house as well. And I
Hmm.
think YouTube took those two search terms and the algorithm did what the algorithm did, and I started looking into investing.
Yep.
My initial focus was on residential because I didn't know any better. And so yeah, I delved into that space. I believe heavily in pay for speed. And
Hmm.
so I did join a paid mentorship because I didn't want to do this. I didn't want to navigate these uncertain waters
Right.
by myself because I wasn't starting off my journey in my 30s or 20s where I could lose it all and start again.
Right.
So I needed to tread gently. I needed to tread softly. Even if I made mistakes, I wanted it to be done, with a sense of, heavy due diligence that had been applied to that process. So went into a paid mentorship. The focus in that mentorship was on residential. That's
Hmm.
what I thought I was going to do. I went in strongly believing I was going to buy duplexes all the way to quadplexes in the Midwest, Ohio
Okay.
specifically. Mhm. And then while I was learning the business, learning who I was as an entrepreneur, my different avatar, chasing shiny object in the meantime, I stumbled across the concept of commercial and the fact that it was an exit strategy that was available to the average normal Joe Schmo like me.
Hmm.
And it spoke to my investor avatar because I knew I wanted to invest remotely. One thing that had stopped me was this fear and concern of not having boots on ground in that area. As someone who
Yep.
was new, I didn't want all the decision making to rest on my shoulders. I wanted to be able to work alongside um, someone who had been more, seasoned and experienced.
Definitely.
And so, the concept of working as a team it's not heavily promoted in the residential space. I mean, it is there, but it's almost inescapable in commercial. You have to
Hmm.
have a team. And so, the more I looked into it, the more it appealed to me. The more I looked into it, the more it appealed to me. And before you know it, I pivoted. So this was late 2022. And I
Okay.
started, researching, hopping on every Zoom and room that I could to find my people, find my crowd. I had just paid into that, the first mentorship. So
Yep.
the last thing I was going to do was pay into another one. So I was trying to find all the information out there for free.
Yep.
And through all those networking efforts and God's, benevolence, I would say, I was able to, connect with a lead sponsor who at the time had a team put together. She had a deal
Hmm.
put together, and that was the beginning of where magic started happening for me.
Nice. Uh-huh.
Mhm.
Great, great, great. Okay. Sounds like a very good journey. And I think, yeah, a lot of people that I have talked to online, they're kind of like anti-coaching or anti, pay for speed, but I don't get that mentality, especially from someone who comes with from an educational background. I mean, I teach and so on.
Mhm.
So
Mhm.
I've always I think, one of the best investments you can make is in investing in yourself, but that's just me.
I
I'm
agree. I
biased,
agree.
so take it with a grain of salt.
No, I actually
Mhm.
that's what I tell everyone
Mhm.
that is looking to get into the business newly. They ask, where should I start? Some people ask, where should I start? I'm overwhelmed. Others are saying, where do I start? I don't have any money right now. And
Mhm.
I remind them that money is not the only currency. So the first thing you do is invest in yourself, and that's what I did. Yes, I was using YouTube. Yes, I was going online, but it was free information
Yep.
that gave me a bit of a head start because remember that quote where you don't need to see the entire staircase, take the first step, you don't need to read the entire book, just open the first page type
Right.
of things. Invest in yourself. Knowledge is a currency. So you can have all the money in the world but not know what to do with it.
Perfect.
Relationship
Yeah.
also the currency. And so you may have all the money in the world, you may know what to do with it, but you don't know with whom to do it with,
Hmm.
or you may have to go around it the expensive way because you didn't use, so and so's connections, etc. So relationships are a currency, and time is a currency as well. So a lot of people in my space, and by my space I mean my world, because my space used to be my
Yeah, not the social platform, the social media platform. Okay. I know, I know.
Right,
Hmm.
yeah. No, but a lot of people in my space, they have equity, they have funds, they don't have time.
Right.
They have the knowledge, a little bit of it, but they just don't have time. So time is a currency. Some people have the time to do all the execution or the operations, etc. So just starting out, yeah, invest in yourself, invest in education.
Hmm.
Uh, Again, mentorship just helps you put all those people together, put all the information together, and helps buy you speed. If you don't need the speed, you don't need to go into it. You'll go into a separate school of hard knocks. Everyone in the mentorship goes through a school of knocks. They may not be as hard as people who are outside of a mentorship, but yeah, just start. Whoever's listening to this, you don't need to be in a
Just start.
mentorship. Just start.
Yep,
Just
yep.
do it. Like
I agree.
like
I agree. Learn in whatever way you can, but make sure you learn, make sure you
yeah.
acquire knowledge, and make sure you start as soon as possible. Okay.
Yeah, my business partner has this saying. She says, you can walk and chew gum at the same time,
Hmm.
right? So you can do two things you don't need to wait to have acquired all the knowledge before you start executing. And I say this because I was the president of the analysis paralysis club, New England chapter.
Yeah.
And I wanted to know everything about everything before I took that step. And I think that's another reason why commercial multifamily appeals to me. Risk much lower.
Yeah.
So high risk, high reward, but this was a lower risk strategy. So yeah.
Okay. Okay. Sounds pretty good. Sounds pretty good. So can you walk us through your first multifamily deal? The good, the bad, the ugly. Don't leave anything out. Let's say.
How much time do we have? So as I said, I through networking, I met up with a sponsor that had a deal. She had a deal put together. She had a team put together. She had the capital stack. Really didn't need me. She opened up
Mhm.
her door to me because a door had been opened up to her in real estate investing.
Yep.
And so I was newer on the team, very, I wouldn't say very overwhelmed, but a little overwhelmed and, just in awe of what I was seeing. And we would meet regularly. It was a 120 unit student housing building in Pennsylvania. So it was right
Okay.
across literal stone throw from in this tertiary market called Shippensburg, stone throw from this university.
Hmm.
And the story was I think it was built in 2008, so it was Class A. And the previous owner that we're going to acquire it from had gotten it in 2021.
Okay.
Used 20, so he did what is slightly unusual. So almost like a classic residential fix and flip model. So he got $1.5 million of bridge debt, threw that into the project, did a full reno, all through 2022. While he was doing all of that, putting in furnishings, Amazon package hub, and they put in a gym, keyless entry. He's doing all of those things. Took his eye off the fact that with student housing, you have a very small critical window during which you have to lease up for the upcoming
Yeah,
school year.
yeah,
So
yeah.
he started losing out on that, had to hire a new property, an additional property management company to help with that. So when we got into it, occupancy was quite low. The vacancy was about 23 or so percent, or 22
Okay.
and a half percent.
Yep.
And so the business plan really was to stabilize and reposition the assets, bring bodies in that will stay. And we also wanted to mitigate against the risk that we had seen with COVID in case there was a COVID 2.0 and school shut down. So transform that asset from pure 100% student housing to a hybrid model. So part
Okay.
student, part, multifamily traditional tenants, which other assets were already doing in that area. We weren't going to be reinventing the wheel. So that was the business plan. The returns was very, very solid. As we were working on that, we actually got awarded another deal. So the lead sponsor physically lives, her market was in, that submarket of Pennsylvania, but she
Hmm.
lives in Dallas. So we got another one in Dallas. So we now had two under contract, and then one of the people on one of the large funding sources on deal number one said he had looked at the raw numbers, the raw
Hmm.
underwriting. He liked what he saw. He wanted her to kick everybody off the team. He could fund the entire thing. It was going to be a $5 million raise. He could fund the entire thing, and they would split profits 50-50.
Oh, okay.
And so, I mean, it was tempting because, as you'll see later, very, very tempting. But she said no.
Hmm.
She said she put the team together for a reason. And he said if she didn't do that, he would leave. And she said goodbye. And so he
Wow.
left.
Uh-huh. Yeah.
And with him left, I think it was about $2.2 million worth of funding that he
Hmm.
had already pledged by that time to bring in. So I'm relatively new. I had just joined a commercial multifamily that you and I are part of, Community. And I get a call saying, "Oh, by the way, we need a new KP because we just lost ours and we lost a lot of funding."
Right.
And so, from there on, it became this race because the clock was ticking. PSA
Right.
had been. It felt like the feeling from there until at least a year after we closed, it felt like we were running on a treadmill.
Hmm.
Uh, highest speed, sharpest incline. It was
Yeah.
this race where we're huffing and puffing because even though, so I told you we had another project in Fort Worth.
Dallas. Yeah. Uh-huh.
Yeah, amazing market. But the return profile on our Pennsylvania one was much more better than the
Hmm.
Fort Worth one. But what we didn't quite anticipate that it was going to be extremely difficult to raise capital in a tertiary market where
Hmm.
no one had heard of,
Yeah.
right? Then you're presenting them with two opportunities. This place, with where, what burg,
Yeah.
and then Fort Worth. And then,
Yeah.
of course, everybody knows DFW.
Yeah.
And so that was challenging. And then we lost a huge funding source and we had to, and because it was across from a school that wasn't, the school had decent enrollment numbers, but it definitely wasn't, we're not talking about, University of, Pennsylvania here.
Right. Hmm.
So we knew our loan product was going to be recourse.
Hmm.
So try getting another KP
Yeah, that's gonna
who
be tough.
was going to be willing to KP a recourse loan.
Hmm.
And, it took a lot of, that's why I became a little more active on LinkedIn. I started
Hmm.
reaching out to people, making connections, trying to introduce people to our team, to our sponsor, to try and see if they would be interested. I could rattle off the numbers on that deal in my sleep because we said it over
So many
and over
times, yeah.
so many times. Trying to shop this deal to a potential team member, but KP we did find. We found an amazing, 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 very kind KP who was willing to partner with us and journey with us. And you know, shortly after we took over that deal, we realized that the property management company wasn't quite on. board, or they weren't quite in alignment as we thought they were. Turns
Hmm.
out that one of the previous owners had an ownership stake in this property. He owned this property management company. And
Okay.
yeah, so all of a sudden, no, they couldn't meet with us every week. No, they couldn't meet up with this. No, they were not going to do this and do that. And so we had to let them go.
Yep.
The irony is we had to let them go at a time where it was a critical time where you need to lease up for the
Exactly right. Not ideal
for
timing there at all.
no, not at all, not at all. And so the replacement we got, they've been such a godsend. We've gone through thick and thin with them. It took us a bit longer, right, to issue out a first set of distributions, but we eventually did. Um, Occupancy numbers, I think, fell down to oh gosh, I can't really remember what it was. It's probably the 50s or the 60s. It was
Oh,
really, yeah, it was really low because, I mean, so with student housing, that happens anyway. Students
right.
leave and they have to come back. And so, we also had to adjust their leases from just being 9 months to 12 months. But where we stood a year out after that, this is a second year of we're actually approaching a third year of holding it, but after year one, we realized that we had actually met in terms of being able to reposition the asset. We had met our year three plan. So the goal was to have switched it up from 100% student housing to 50/50
Hmm.
by the end of, yeah, a certain time frame. We had achieved that by the end of year one. So that was great.
That was
The
pretty
students
good.
Yeah, students pay more, but they're also a little more work to handle. They pay more, but they don't care about utilities, right? Because it's all bills paid.
Right.
So being able to get more traditional tenants was helpful because we were able to offset utility costs on them. They pay for theirs. And so now we are almost firmly at 70/30, or very close to 70/30 ratio of our students to as we approach this new student of fall, the new school year. We're
Hmm.
close to the 70/30 mark, which
Okay.
is what we would have probably achieved by the end of, we're holding the deal for 10 years.
Yep.
By the end of our fifth year, we hope to do a refi. That's actually happening very soon, actually. So many things. So the original plan was after year five, do a refi, return everybody's funds to them, write out the rest of the 5 years on an infinite return model. But
Perfect.
that may actually be happening sooner than we thought. But yeah, that deal taught me a whole ton. Taught me capital raising the wrong way. That was what I was doing. And then the importance of a team, right?
Hmm.
This sponsor could have given all of us up and gone with it. She found the deal. She underwrote the deal. She had all the capital stack right there, telling her, "I will do this with you."
Yeah.
But the importance of a team, and I think it really unlocked and shifted something in me as I went on with my subsequent raises. And I think we've lent ourselves more to opening our doors to people who are definitely new in this space and seeing how we can jumpstart, accelerate their multifamily journey.
Okay, great, great, great. I think, but I want to make a quick comment on your sponsor. It sounds to
Yeah.
me like she has very good integrity, which I think is super important, and a lot of people don't really seem to pay attention to it. They think a little bit
Mhm.
short term, but I think in the long run, integrity and being trustworthy and
Yes.
people knowing that you will stick by them is going to bring you a lot of great things in the long run. So I'm pretty sure that she will find a lot of
Absolutely.
success over and over and over again after the
Absolutely.
story. Yeah. Okay.
Absolutely.
What a journey. What a journey. Okay,
Yeah,
well, yeah, you survived. You survived. All right. So
we certainly
so
did.
some follow-up questions then. So how has your strategy evolved since that first deal? So like for example, deal criteria, has it changed at all?
No, I think we still look for deals that cash flow from day one. We are sticking with the markets that we are in. we stuck with the same type of return profile. We underwrite very conservatively. So I'll tell you that we closed only one deal. We closed two deals in the first year, one deal last year. And
Hmm.
we weren't going to just close a deal for closing a deal's sake. A lot of people, or a couple of people probably do that. They begin to adjust things to make them work, or they buy deals based on what they project is going to happen, the pro forma. But what if that doesn't go your way? So no, we have basic metrics that we stick to,
Hmm.
things like cash on cash of at least at the very minimum, 7 to 8%,
Yep.
equity multiples of 2 plus, that 2x, I'm sorry. Those sort of things we refuse to budge on, and there needs to be a lot of uh I guess wiggle room
Hmm.
for if and when things go wrong.
Yeah.
Yeah.
Okay. Okay. That's good. I think it's very good to be conservative. Very, very good to
Yeah.
be conservative. Okay. And then what about I think pretty much your mindset must have changed. So can you talk a little bit, speak a little bit about your mindset shifts since that first
Yeah.
deal? Hmm.
Yeah. So I mean, so two a lot of things happen, but I would say two big, huge things would be I went in not thinking I was going to raise capital,
Hmm.
right? Or raise a ton of capital
Yeah.
because again, she had the capital stack already there, and she said, just raise what you can. And then it became, oh no, everybody's raising.
Hmm.
Right. And I hadn't been trained or learned how to do this. You certainly need a significant measure of sales skills.
Hmm.
Uh, but you need to get rid of a ton of head trash in order to
Hmm.
do this. And I hadn't yet done all of that. I mean, it's always evolving, so it's something I'm still doing. But being able to see the former me who took two deals to coworkers and other healthcare professionals saying, "I have two deals." I hadn't branded myself.
Hmm.
I kind of came across as very sleazy, salesy,
Yeah.
scammy,
Yeah.
Ponzi scheme like,
Yeah.
and being able to overcome that, deal with what we generally would say is rejection, being able
Hmm.
to be okay with that, understand what it was I was doing. That shift, I had to learn it quickly on the fly as I was doing it, and
Right.
adjust my messaging, adjust my the frequency with which I was reaching out to people, the energy I was bringing to each investor call, adjust. So there was a lot of adjustment I had to do with that. So personally, I grew through there,
Hmm.
but as a team member, it showed me one thing. I have different investor avatars, and one of them is team building. I didn't know that until it fell into my lap.
Yep.
And so instead of reaching out to people and simply telling them, oh, hey, I have a deal, come invest with me, I wanted to know what people's stories were. And if they were brand new, if they were just like me, never had done a GP deal, I never had been on a deal as a general partner,
Hmm.
saw it as an opportunity to also open a door for them, as had been done to me.
Yep.
And then there are also these people who are in between. They have the heart of a general partner. They're definitely on the road to becoming one. But they're struggling with this chicken and the egg thing where they want to join a team. In order to do that, they need to bring capital to the team. But to get that
Hmm.
capital, the capital is asking them, hey, what deals have you done? Where's your
Exactly. Yeah. 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 Where's your
track
track
record?
record? Yeah.
Exactly. So there was then this in between purgatory type state. And so what I did with permission was ask our lead sponsor if it would be okay for some of these people, if they had the liquidity to invest with us, to bring them behind the scenes. Because one of
Hmm.
the things we had done prior to all of this was being extremely transparent. We show our financials. We're very transparent when things are going well. They go well. When they're not, we tell people. So every month I, as a lead investor relations person, I prepare the reports monthly for our team and
Hmm.
disseminate on their behalf. And then every 3 months we have webinars. But I knew that my growth skyrocketed when I sat in on those asset management calls. I knew that I was learning the business from inside out. And so I
Hmm.
wanted to present that opportunity to people who were in this in-between phase, because they could take the information that most LPs are not privy to and
Right.
harness it, repurpose it, and use it to attract investors,
Yep.
over a period of time. And so I think the experience, shifted me from just raising capital for just myself. I'm in this for myself. I have my investors. I'm doing this for me, 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 me,
Hmm.
to, hey, there's somebody over there who might be struggling on their journey. You've broken that curse of the first deal. Actually, there were two at the same time. What can you do to help them in whatever little way that I can?
Right.
So yeah, that's kind of what I've done ever since.
Okay, okay, it's pretty good. I think that's definitely helpful. Like, if someone can get into a deal as an LP, but then they can, yeah, like you said, peek behind the curtains and see what the
Mhm.
GPs are up to, it's definitely very
Yeah,
helpful for anyone who has, aspirations to be a GP eventually.
sure. Yeah.
Yep. Hey, if you've got a real estate deal, a problem, or even just a question, we want to hear about it. Doesn't matter if it's big, small, complicated, ugly, or somewhere in between. If it's a good deal, we're absolutely interested. Period. And if you've got capital, you need to put to work in solid real estate opportunities. We've got those too. Either way, let's talk. Here's how this works. We always need more deals. We always need more capital. And we always find a way to make it happen. No games, no runaround. If we can't work together directly, we'll hand deliver you to someone who can. Okay, so let's move on to the next section, tips and pitfalls. Um, and what are your biggest lessons around finding deals?
Finding deals. So when I started, before I met with this sponsor, I thought that my way into being a GP was going to be through acquisitions. And
Mm-hmm.
so as most people think.
Yeah, yeah,
And
yeah.
so I living in Massachusetts, I was prospecting in the two landlord-friendly states that I thought were closest to me within the area that I had an interest in. So
Right.
Georgia and North Carolina,
Mm-hmm.
single plane away. I knew exactly what to say, and the brokers were calling me back. So, a couple of things. If someone's new and listening to this, if you're reaching out to brokers, know exactly what to say, the terminology. They can
Mm-hmm.
s- they can sniff you out if you are brand new and unsure or uncertain, or you're bringing in residential terminology into that. I see people say, "Oh, the broker asked me for proof of funds," which is something that people do in the residential space, not so much in the commercial at all. They
Mm-hmm.
do that. I'm told that they do that if they're trying to sniff out brand new people. And thankfully, I never got asked that. So that's one, learn the language. Number two, find a team first.
Mm-hmm. Okay.
Find a team first. If you're brand new to this, find a team first. So I spent time trying to do acquisitions. I was getting deals. Yes, you would have to either be the underwriter for those deals, do so in a reasonable period of time. So 24 to 48 hours, you want to have underwritten that project and given feedback and continue to go back and forth. Underwriting is something everyone should know how to do, but
Yep.
everyone is not going to be the underwriter. So the time it was taking me to, get through a single one, too long. And you out of sight, out of mind. So if you're going to go into acquisitions, you either need to have a full-time dedicated rapid fire type underwriter, or you're the one doing it yourself
Mm-hmm.
to stay top of mind. But again, why even after I, closed on my first two, I thought about going back to acquisitions, and I figured, why would I for now? I had already learned so much through raising equity. And the sponsor I was partnered with, she gets, she has amazing deal flow. So there
Mm-hmm.
wasn't any reason to.
Yep.
But if I had to do that, I would definitely want to know that I had a team behind me. So it's
Yes.
not just me. Why? Because the brokers are direct to, and again, I can only speak about, broker-led or broker-involved deals. I never spoke with an actual owner, a mom and pop type owner.
Right.
But the brokers are essentially direct to seller, right? They go to the sellers and they say, we can, we can move this product for you. So if you're this, like I was, lone voice on the phone that they had never met,
Mm-hmm.
I couldn't swing by their office for coffee on a Friday.
Exactly.
I couldn't build rapport. That's going to be tough. So for those who are thinking of doing this, building rapport is huge. And then that track record, if you track record team, in order to get access to pocket listings, I think is huge too.
Yeah.
Yeah, so those are my thoughts.
Okay, perfect, perfect. And then what about operating and executing on deals?
And are you looking for tips on those? Because that's kind of broad.
Okay, sorry. Let me
That's
narrow
okay.
it down a bit.
So are you
Okay.
are you are you asking about asset
Um,
management, which is what I
yeah,
do?
so like asset management, basically after you've already closed the deal, okay, and then now you got to asset manage it basically. Yes, I'm definitely looking for like just basic tips there and also basic things to avoid, like mistakes to avoid there.
Yeah, so asset management, as you know, I actually thought started once the deal closed. It starts before, right? So
Mm-hmm.
it's making sure your business plan gets executed properly. And that boils down to something I continue to say, the team.
Yes.
Whether it's your asset management team. So again, full disclosure, we target assets that are 100 units and up. So maybe the very teeny tiny ones, someone may choose not to have an asset manager, or maybe someone has the large ones and they're vertically integrated, and so this doesn't really
Apply.
apply.
Mm-hmm.
But there's still a huge reliance on, if you're using a property management company, they hold the key to an effective business plan being rolled out. So you want to
Yes.
ensure that you have a vetted, trusted, we know your asset right down to the street level, investor-centric type of property management company.
Mm-hmm, mm-hmm.
So that would be one tip I would give you, as well as an asset manager. Having a great asset manager at the helm of things. We're very fortunate on some of the deals I'm on. We have accountants who are
Okay.
also general partners, right? Because there are pieces that, reconciling the financial statements that the property management gives you, you really don't want to just take it, at face value and run with it. So we
Yeah.
have to get it reconciled, and we have accountants that do that. And I'm glad I don't have to do I don't have to do that. I take the reconciled piece, I read it, I study it, and then, I use it to build the monthly reports. But if I were to give a tip to anyone who's listening, who will listen to this, I do want to remind you that I'm a pharmacist by training. So I didn't have real estate running through my blood. No,
Mm-hmm.
I didn't have it in my family. It's not that I grew up with it. But it's possible to find your way and your niche on a team. And what I
Yeah.
did was simply, decided to lead with value. What can I do here? I was the last to join the team on the first deal, but what can I do? How can I help? And
Mm-hmm.
every little opportunity that presented itself,
You just jumped
pleasant
into
or
do it.
just, I'm going to smack these people with as much value as possible.
Yeah.
Because at the time I was bringing in the least, right? Even if you're bringing in the most, how can you lead with value? Be a servant leader that way. So that's
Yeah.
another
Okay,
tip.
okay. And so then one more question would be
Okay, because I do have a hard stop, but sure, I hit me with it.
okay, so we'll skip that question. Let's go to the rapid fire round. Just hit me with
Are you
your
sure? No, no, no.
no, no,
Give,
it's
give
fine.
you
Uh,
you piqued my interest now. Now I need that question.
the question is not relevant. Don't worry. We're skipping it. Don't worry. It's gone. We're going to the rapid fire round.
All
So
right.
just don't think. Just hit me with whatever comes to
Oh
your mind.
Lord. Okay.
All
Oh
right. Just
Lord.
just speak your mind. Speak your mind. Let it flow, and then
Okay.
deal with your regrets later. Okay. So,
Oh,
so
oh heaven.
question number one. What is your worst tenant story?
Oh, what's the story? Thankfully we've had we had one who this doesn't really qualify, but I'll say it anyway. I think we had someone who was just happy. So Texas,
Hmm.
uh, open carry state, or they can carry guns. And I just shot a couple of rounds in the air,
What?
and so that was a little concerning.
Wow. Okay. Yeah. Well, moving on. Um, how about your favorite expense saving hack?
Hack. Ooh, I like the fact that in Texas we get to litigate our
Mm.
taxes. They it's a gosh, what's it called? no disclosure. I'm not saying it correctly. It's a no
Oh, Texas is
disclosure.
a non-disclosure state or something like that,
Non-disclosure
right?
state.
Yeah. Uh-huh.
Right, right. So you get slammed with taxes and what they think it should be, and we all
Hmm.
have lawyers lined up, and we slam them back, and we litigate, and it comes right back down, and then we get this check and the check is always so timely. So it comes in the middle of, oh, we really needed this money. So yeah, I like that piece.
Okay, okay, great. And then how about what do you so like there's a lot of advice floating around in the real estate world, some of it good, some of it not so good. What do you think for you personally has been some of the most overrated advice?
Oh, if you have a good deal, the money will come.
Hmm. Overrated. Okay. And then how
Overrated.
about yeah. So it's not as easy as people make it out to be.
No, not with a shaky economy,
Yeah.
not with on unstable political circumstances, regardless of which side you're on. No, the
Hmm.
money and again, if you go, acquire an asset in the tertiary market like we did, the
Yeah.
money was tough to come. So no, and it was a great deal. It was a better deal than the other one we had at the same time. So
Yeah.
nope.
The way people usually combat that is that, oh, maybe if the money doesn't come, it means your deal is not that good. But that's what they
Yeah, no,
say.
no.
Yeah, but
Yeah,
okay,
no.
okay, all
Money's
right.
money's tough to come by.
Yeah. I agree. I agree. Don't worry. Okay, and then conversely, what do you think has been some like underrated advice?
Hmm, that's a good one. Underrated advice. Um, Not being afraid to fail forward.
Hmm.
I don't know if that's underrated. But because fear is what holds a lot of people back.
Yeah.
So what's the worst that will happen? You'll fall flat on your face. Pick yourself up and keep going. Yeah. So fear held me back. But then I was at a point, remember you asked in the beginning, how did I get here? And I said life flung me here.
Uh-huh.
So I was at the point where I was already back against the wall, down on the floor.
Nothing to
Uh,
lose.
Nothing to lose, nothing
Hmm.
to lose, but still afraid.
Yeah.
Nothing to lose, but still afraid. So there was still some unlocking that needed to happen. So I think anything mindset.
Hmm.
Anything to do with mindset needs to be in place. It needs to be healthy. It needs to be dealt with before anybody becomes a successful entrepreneur.
Okay, fair enough. I'll take that.
Yeah.
And then so what do you think, like especially like in the Warriors, people like to talk a lot about like, superpowers. Um,
Yeah.
but I'm gonna put it in a different way. So what do you think is like your unfair advantage?
Oh, unfair.
Hmm.
Okay. Oh gosh, I don't I don't know that I have one.
Hmm.
Unfair advantage. I no, I don't have one. And I'll tell you why.
Okay.
I didn't grow up in this country.
Hmm.
So most of my friends and family that knew me from before are international and are
Right.
struggling with, converting currencies to invest.
Hmm.
I single mom,
Hmm. Tough one.
work two jobs,
Another tough one.
uh, came from an environment that had scarcity mindset,
Hmm.
Unfortunately, the folks in my country tend to just, take money from the government. It leaves, it never comes back. And so you grow up with this, I'll just grab what's mine and I'm not thinking about the next person. So
Yeah.
I don't know that I have an unfair advantage, to be honest.
Hmm.
Yeah, I don't think I have one.
Okay, fair enough.
I
I'll
know
take
people
that.
say maybe, oh, you work in healthcare, but that didn't necessarily work for me. If because I hadn't branded myself. So yeah.
Hmm. Okay. And then if you can go back, I don't like to use the word regret, but if you can go back in time,
Mhm.
what is one thing that you might do differently?
Oh yeah, so I would focus my efforts on raising capital instead of trying to do acquisitions and underwriting. Of course, learn how to do that, but I
Hmm.
would definitely channel my efforts towards raising capital. That is a singular skill that every entrepreneur should know how to do.
Okay.
Yeah.
And then sorry, a quick follow-up question. So someone who wants to raise capital, where should they start?
Again, invest in yourself,
Hmm.
right? So invest in yourself. But when you get all of that out of the way, all the head trash out of the way about, you're not selling things, you're not trying to beg people for money. Once you get all of that piece out of the way, your phone,
Hmm.
your email, your social media, you are not looking to ask people necessarily for money. You're
Mm-hmm.
trying to show them an opportunity you have by the creation of value.
Yeah.
Why should they invest in you? So you need to be consistent, and you need to show that you are bringing, value. Some people will know you, and I think I may have shared this with you, Hugo. Some people will know you, have funds to invest. They will never invest with you on your first deal,
Yeah.
because
Mm-hmm.
they still see you as, Hugo from before. Then your second one, they'll go, oh, please, that was beginner's luck. He doesn't know
Yeah.
what he's doing. And the third one, they may go, wait a second now, okay, let's talk.
Yeah.
And the reason they are doing that is because you prove yourself, but you had to be consistent. If you
Mm-hmm.
weren't consistently posting or consistently telling people what you were doing, how will they know? I tell this to I think on every call I'm on, I always tell people, listen, as popular and as successful as Coca-Cola, McDonald's, etc. are, they still
Mm-hmm.
advertise.
They still
So you
advertise. Yeah.
have to be consistent. You have to consistently continue put yourself out there. You're not going to be everybody's cup of tea. Not everybody's going to be aligned with your investment style or strategy, and that's okay.
Yeah.
That's
Okay.
completely okay.
That's beautiful advice. I love it. I love it. Okay. And
Yeah.
so okay, one one final question is so what's your best advice for new investors? So someone who is maybe they're thinking about getting into real estate, they're thinking about investing in multifamily, whatever. What's your best advice for them?
I would absolutely ask them to again invest in themselves. And what does that look like? That could mean watching videos, learning things through podcasts. Again, it's like you're learning a language that you've
Hmm.
probably never heard before. So whether you're learning a conversational style, go to meetups, go to reasonably priced uh, events, where you have other real estate professionals. You're able to then tease out what you want and what you don't want. I
Hmm.
had to do that in the beginning. I knew I didn't want to be a fix and flipper. I knew I didn't want to be a wholesaler. It took me a while to get there, but that was one of the first things I had to figure out. What kind of investor did I want to be?
Right.
So learn virtually, learn in person, but invest in yourself, invest in yourself, invest in yourself. Start there and
Okay.
believe that you can do it.
All right. Okay. I like it. I like it. All right. So I think that's the end of our interview today. And again, thank you so much
Yay!
for coming here.
Of course.
Oh, sorry. No, no, no. I have one question. One more question.
You lied.
I don't know. I just saw some notes in front of me. So sorry about that.
Okay.
Is there anything that I did not ask that you think, someone who is listening to this or watching this might have wanted me to ask, or something that you wish I asked you?
Well, if I didn't impress this on your listeners the first time, if you do go into commercial multifamily,
Hmm.
I want you to know that the team is more important than the deal.
Yeah.
So a great team can take a struggling deal and breathe life into it, and a horrible team can take a great deal and shred it apart. So if you go into commercial multifamily, focus on finding a team that you are completely aligned with. Because one of the sayings I have is our deals are great, but the team makes it better. So.
Yeah. Okay. Okay. Perfect. Perfect. So that's a perfect place to end. And then if someone wants to, reach you, what's the best way for them to do that? Where can they find you?
I live on LinkedIn. I live in Massachusetts, but I also live on LinkedIn.
Okay.
And there's only one of me for now.
Yeah.
So Ify Asoh. I think I have my titling behind me, Farm D.
Hmm.
That's my LinkedIn. I'm also available via email. That's Ify at GoshenCapitalInvestments.com. Might be
Okay.
easier to just go to LinkedIn, right?
Okay. I'll put everything on the screen later when I
Of course.
when we edit this, so it's fine. Okay, so thank you very much for, agreeing to be here today. I know everyone's time is very valuable. Hope to have you back maybe 6 months, 1 year later to see how you're progressing, see what new deals you have and so on. But for now, okay, thank you so much. It's been a really, really pleasure. It was fun. Thank you.
Thank you. Thank you, Hugo.
Okay, bye bye, bye bye.